Viewer request tango calling on stock twits. Love it. Oracle. I did this, I think, in March. I was questioning myself if Oracle was going to continue stage 2. Where's March? March. Back here. Around this choppy area here. Wasn't sure. And when you're not sure, usually you're getting warning signs. You're getting clues that you're not in a clear-cut stage 2, guys. And Oracle, we're going to zoom in. Still not clear-cut, guys. You know, some charts we've seen on the monthly candle chart, 12-month average. You have like low volatility, goes up, touches, continues, and when it breaks down below 12-month average, you're in for some churn for a while. Then after that, you don't know, stage 4 or continuation stage 2. Or Oracle has been in, I don't know, with that megaphone. Look at that. It's just insane on the monthly. Expanding volatility. But with the power of the monthly candles, all those wicks being the noise, the closes from smaller time frames, daily, weekly. And if you just focus on the closes to draw where the market decides that those are critical level, where people say, okay, this is overvalued, I'm selling, this is undervalued, I'm buying, then you start getting a picture, guys. And this is pretty wide range right there. Next step to look is the price action. Is it below, above the 12-month moving average? And it was up below here, dragging it down. Then it came back up, trying to flatten it. Now the price action is right below the 12-month moving average. So pretty much in close to no man's land, but edging for a decline right now. But until you have a close above 51.60, above 51.60, or a close below 44, I don't have any implied measured move using my classic chart trading framework. Let's draw a downwards arrow, and these would be my targets eventually. Crazy targets. Implied measured move added to breakout line. So this is the bullish case right here, target 59. And here's the bearish case, the downwards move case, a break below. So first the price action would have to go here, test that breakdown line. And if it didn't do it, one shot, break below 12-month average, probably go back, test the 12-month average, and then maybe go down. And if you have a close below that, target's all the way down here, but there's a lot of support. This is all previous resistance turn support, so you're gonna hit a wall right here at the 41 level, so you might actually get a bounce. And all this previous herky-jerky movement is gonna cause herky-jerky movement later on. All this these consolidation patterns, all this resistance turn support. So now when the price action goes back down, it's going to hit it, pull back up, test the breakdown with the support, now turn resistance. In the meanwhile, 12-month average goes down, then go down, maybe go down next to the next level. And then here's a natural support. Same thing here, could have a bounce off that. And every time, get that. So it's not a big move all the way down. When you see a nice stage 2 with a barely defined support, then after that, when you break down from a top, it's timber, big red candles, nothing in the way until you hit the base of the stage 1 breakout, that strong base where a lot of people decided that was fair value or a place to enter. But when you have big movement like that, then you have all these different levels that you're gonna hit along the way. Just review them, analyze them, make you understand that they're there, and then you could choose between a setup which has a nice implied measure move without all these levels of potential support on your way to the target, or you could choose a setup where it's clear sailing all the way down, guys. All right, Oracle, let's zoom in. Zoom in on the weekly. What is the weekly chart telling me? Oh man, look at the mess. Volatility increasing. False breakouts. If you didn't look at the monthly candle chart and have that monthly defined breakout line, you could have got whipsawed here. You could have got whipsawed here. Look at that. Oh, you think to the moon? And you have the Ichimoku cloud bring the price back up. Oh, below the Ichimoku cloud right here, Pat. Time to short. Well, not really. Even if there's that huge red volume here, even if all this damage is done, wasn't quite ready to go down, right? You're not closing below that monthly defined breakdown line. Back up. So volatile, so volatile. And then after that here, starting to calm down just a little bit. Man, the stock, when it sells hard. Look at these red candles right here. These red volume candles. Whoa, look at that here. That's a lot of damage. That in itself is not a warning that, not a sign that you're definitely going to stage 4, but it's definitely a warning that you're risking too much to overcome that than you would with a nice stage 1, which didn't have this crazy selling, this crazy red candle. Why go in the stock when you have this type of damage that happens to it? All these buyers, now sellers, you have to overcome all that and then maybe hopefully later on overcome the high, when you could just go in the stock that has already based, which already the accumulation has been done and it's ready to explode. There's no more sellers. All the sellers, potential sellers, are already abandoned the ship. So that's kind of things you want to look for, these big red candles with high volume. Because look at all the time it needed, all these weeks, just to have a chance to even retest these previous highs and brought back down. And you really want to stay in the stock all that time, you bail. And you don't want to be trapped. It's the worst feeling in the world. I've been trapped often and I do not like it. You feel unempowered, helpless, can't do anything about it. Because I didn't want to take a loss. I let it rode too long. Like if you live this candle and you sell here, it's not a mistake to sell at this part. It's just not. If you want to sell, you get out. Even if the price action goes back here, it was the correct decision to get out. Because this is just hope. You're hoping it goes back up. And I don't believe that if your position size is okay and you haven't went full margin, this is it, the oracle's going to the moon, then you should be able to cut your losses before they become crazy losses. So I'm saying that out loud, but it's mostly for me to really crystallize those thoughts. But like I say, if you don't learn from your lessons, I guess you haven't been burnt enough. Eventually you'll get burnt enough that you'll say, okay, that's enough. I'll cut my losses and I'll preserve that NAV and just go in the stock that has higher chances of going in my favor. A nice stage 2 consolidation, stage 1 consolidation breakout, or a nice stage 3 breakdown to stage 4. All right. See, this would actually look pretty nice if we break out to the top here. Nice sideways move. If the volatility can contract after that explode, that'd be pretty nice. But we're not quite there yet, guys. So I'm looking at the stage 4 decline scenario. We're out of the Ichimoku cloud. Trying to underperform the SPX. Not green anymore. Soon that's going to be red. If the 30-week average is going to, if it starts declining with the more price action you have below 30-week average, this could potentially be a start of a nice stage 4 right here. If a close below 46, a close below 47 on the weekly could actually be the beginning of a stage 4. And after that, give some momentum and see if that, and then after I hit that monthly defined support, bounce back up. Another great entry point right here. Go down. Another entry point right here. This is my imagination how it could happen, but it's based on these support levels, or it could happen. What happens when you hit support? Usually you have a bounce back in the opposite direction, doing ping pong until one of the levels fails. But usually the trend, if it's in your favor, it's the level that's in your way, the support that's going to fail, and not a reversal, just a simple pullback. Okay, orcl, here you are. Here's the level 47. Check for a close below that. Until then, you're still in the stage 3. Ciao, guys. And subscribe if you like it. Thanks.